not based on the formula that we set out. We've got to be really kind of disciplined around the formula that you set out, because the market does ebb and flow and new entrants do come in, but at the end of the day you're going to be judged on returns.
Hey, and welcome back to another episode of Angels, Exits, and Acquisitions. I'm your host, Jeff Bars, and today we're speaking with Mike Allen from the UK and Cambria Private Holdings and Cambria Auto Group, an incredible company that has done a number of M&A, IPO, and even delistings of companies and raised a substantial amount of capital for a number of automobile industry acquisitions, buy and build, as well as early stage investments. So lots of great information here from Mike. Really great interview, and I think you'll find some really incredible value and great nuggets around what it takes to actually scale up a company that's in an industry that's been around for a century or more and still has potential for upside. So make sure you watch the whole thing, and as always, like, subscribe, and share. Thanks.
Welcome to Angels, Exits, and Acquisitions, the place to learn how to fund, scale, exit, and massively profit as an angel investor or entrepreneur. Brought to you by the Angel Investors Network. And now, here's your host, Jeff Barnes.
Hello, welcome back to another episode of Angels, Exits, and Acquisitions. I'm your host, Jeff Barnes. I'm here today with Mike Allen. Mike, how are you?
Hi, I'm well, thanks, Jeff.
Wonderful. Glad to hear that. You're coming to us from over the pond, over there in the UK area. So thanks so much for being here. I know it's getting into your evening time, and we really do appreciate having you here on the podcast. So before we get started and talking about Cambria Auto Group, Cambria Private Capital, and all of that, why don't you tell folks a little bit about yourself and some background as to how you got into the role you're at right now?
Yeah, okay, sure. So I started my career around 2001, a firm called UBS Global Asset Management. I was a graduate. I studied international management in German. I studied in Germany for a year. During 1999-2000, the stock market felt to be a really exciting time where everyone could make a lot of money. And then by the time I graduated, got a job within the stock market. It was a different place. We obviously had 9/11, and that had a big impact on equity markets around the world, including the UK. My remit at UBS was to support a team of three, and we were looking for deep value, small cap investments around Europe at that time. And what really came on my radar was car dealership groups. So there was a assumption that cars would just go online. There wouldn't be a need for car dealership groups, even as early as 2001, and the stock prices got really low. I noticed that the car dealer groups had they had a lot of property, a lot of asset backing. They did have low margins, which I felt investors misunderstood. And it was a fragmented market where the better car dealers and the bigger car dealers were consolidating quite rapidly. So I was fortunate to back some great businesses, Pendragon, Reg Vardy, CD Bramall. Some of these businesses have since been acquired themselves. But what I really noticed there was some great entrepreneurs running these businesses who were just really, really talented people. And I was fortunate to meet those people at such a young age. By the time we got to 2002, 2003, some of those stock prices had doubled, trebled in value because the market started to see the value realization that was severely lacking during the tech boom. I was also fortunate to learn I really focused on business services as well. So logistics, transport, recruitment, people-based businesses as well, some industrial businesses. So I had a good broad experience, but my passion was always automotive. I always felt it was a bit of an underdog, and I always felt it was misunderstood back then. I then changed tack. So I went from buying shares for a big pension fund to selling ideas to pension funds. There's a few friends of mine. I moved from London to where I live in Liverpool, and there was six of us that set up an office for Numis Securities. And because I had some good friends in the automotive sector, I started writing research, trying to persuade pension funds to buy shares in the dealer group. So acted for some fantastic businesses, which was pretty much for about 20 years. So was involved in helping Virtue Motors scale and grow. We defended Lookers against a bid against Pendragon, which was really exciting in 2006. We were involved in the IPO of British Car Auctions, which was £1 billion deal. So during my sell-side career, I did some really good automotive deals. And in my last job at Zeus Capital, where I built a research team, I was involved in about 2 billion of equity fundraisers. So I did a lot of IPOs, secondary sell downs, etc., across business services, but did quite a lot in automotive. And I guess where Cambria comes into that. So Cambria was founded by Mark Lavery, who's still CEO and chairman of the group today. He worked with some really smart guys at Promethean Investments, and they did a buy and build strategy. So they founded the group in 2006, and they waited for a bit. And then when the financial crisis hit, they were able to buy the car dealerships at very distressed levels, a very, very good team of operators where they could turn the business around. And the cash flow that they generated allowed them to fund other deals as well. So they got very good at that. They started from nothing. The business was on the stock market from about 2009 to about 2021, where they were doing 15, 16 million of pre-tax. They then, during COVID, the share price was, all car dealership valuations again were hit quite hard during COVID, but during 2022 the businesses, all the sector performed really, really well. And Cambria was taken private. They paid a good price. They paid 80 million, where the trough point was about 40 million, and they've since gone on to run a really efficient automobiles business. They've got a leasing business and they've got an insurance business. So the leasing business is called Sogo. The insurance business is called Ramp. They've got a lot of property. It's a very profitable dealer group. And I was fortunate to be asked to set up Cambria Private Capital, which was the venture that we started about a year ago. We do advisory services, and we look to invest in post-seed, pre-series A automotive businesses where we can back test in a live dealership environment. So we're quite slow in terms of, we're not your traditional VC where we kind of want to deploy lots of capital and then move on to the second fund. We really want to get to know businesses and really test the businesses and then really help them get to the next level. So that's where we are. And aside from that, I've been fortunate to be board advisor on a number of great businesses. So Carwow for 14 years, just recently done a fundraise. Bumper has just done a Series B. At DSG Finance, which is a big finance broker in the UK. And I'm on the supervisory board of AAA in Prague, which is Central Europe's biggest used car dealer. So, great experience from an advisory perspective, which hopefully we can put to use from an investment perspective as well.
That's awesome. So you have a lot of experience when it comes to what we might call your traditional brick and mortar, but leveraging that into, like you're saying, some of these tech plays and IPOs and things like that. So that's wonderful. You mentioned something towards the beginning of that, saying that you were focused on deep value, small cap investment opportunities. What do you mean by that?
So we went back. We were very keen as a team on Benjamin Graham, on deep value investments, Warren Buffett, all these value guys were We looked at businesses on a 5-10 year view. We calculated what we thought was the intrinsic value. And then we looked at where the share prices were and, how big was the discount to where we believed that the intrinsic value was. So I was really fortunate at that point in my career to work with some amazing investors. So, some people were very much caught on the quarterly earnings and what they're going to say this quarter, etc. We just didn't look at that. We looked at, what does the next 5 years look like in this business? Has the gap between kind of reality and, fantasy of stock markets and reality got too big? And there were times where it was tough, particularly when I first started, because there was still some tech. Everybody was focused on tech and everybody forgotten about some of the traditional businesses as well. And it's really hard when everybody's swimming in one direction and you've got to go the other direction, and you feel like you're missing out, and it's tough. But I was fortunate to work with some really strong characters and great investors who kind of kept their focus on that, and they were rewarded for that in 2002, 2003.
Yeah. So, Mike, one of the things that we're looking at on a general basis is, we're angel investors network. And so we're always helping people with raising capital for early stage companies, right? Mid, late stage startups, but they're still really early in the grand scheme of things. But one of the things we realized is that this idea of, you might hear of it as entrepreneurship through acquisition or buy and build, as you mentioned, is really a great way to get into the business ownership, entrepreneurship game. And then there's a lot of value creation that can happen, even though there's a business that's been around for a very long time, right? And I think it sounds like you guys have a lot of experience doing that and finding that intrinsic value in a company that's already established, but ways to create value long-term with that. So can you talk a little bit about your guys' buy and build strategies?
Yeah. So I think with buy and build, obviously, that was something really that I wasn't part of. That was something that the Cambria Automobiles team are part of. But they had a visionary founder who could see value, but he was also a great operator. So it's one thing spotting value that somebody like I could do, but it's another thing in terms of having the operators there to turn the business around. You obviously need a very strong finance director as well, and you also need very good other stakeholders, so banks understanding what you're doing, why you're doing it, giving you the faith to do it, which they had as well. So it's having a very good collective team. There's one thing, you can buy a business well, but it's what you're going to do with that business as soon as you got your hands on it. And so you need a selection of finances, operators, and a visionary really to kind of, because you never know. You always go into these things thinking that you got a good price, but then it's spotting whether there's anything nasty in there that ensures you don't get a good price, and that can happen on any transaction as well.
And I love that you talked about essentially 3 major components right there for, buying a company and helping to grow it or doing roll-ups or anything like that. One, you have to have the finance piece. We all know that you got to be able to put the capital together to get this acquisition or merger taken care of. Then you have to have great operators, right?
Yeah.
I think that's something that a lot of people miss. People seem to think that you can just go buy a business and it's going to just continue to run and grow on its own. That's not the case. You have to have an incredible operator. But along with that incredible operator, you have to have a visionary who can see where it should go, right? To help put all those pieces together. And then the operator implements it. And of course, the financiers are there to, reap some of the rewards and also help make it happen. So you've been an advisor on a number of companies. You've gone through IPOs. You've done M&A. What do you feel are some of the key things that when you guys are looking at? I'm assuming a lot of times you guys are sitting on the finance side, but you're looking at the operators, right? You're looking at the visionary, or maybe you bring the visionaries to the table. What are some of the things you guys are looking at to ensure the long-term success of your acquisitions?
We'd focus a lot on the founder and the visionary for a start. So has he done it before? What's his motivation? How big does he want to be? So sometimes people can be really ambitious, and especially with a buy and build, you need control as well. So you need somebody who's kind of realistic, that really, really understands the market, that can see the value, is ambitious enough to achieve what they need to do, but not too ambitious where they go too fast as well. Having a really solid finance team is really, really important so that they can spot any kind of nasty parts of any transactions which can become toxic. Then, of course, the operators in terms of what is their kind of 3-year plan? What do they do immediately? What's the template for success? Is it a cookie cutter, or is it, does each deal, are they moving in different parts where they don't have any experience? And then on top of all that is the advisors and the non-execs who's staking their name and their reputation on this as well. Because I think it's essential to have a couple of strong advisors or non-execs just to be there to, things go wrong in these deals, particularly in the early days, and it's kind of picking the founders up that, it's not as good as you think, or it's not as bad as you think, and they keep the focus, to keep on. So it's just having the team together, and have they got the right idea? Have they got and also we conduct our own market intelligence as well. So I was fortunate in my sell side career. I was involved with the UK veterinary sector, where there was a buy and build. The UK funeral sector, we acted for the second biggest player there, which buy and build. The car market, like Virtue Motors, was a big buy and build for many years. It all boils down to do the people understand does the financial formula make sense? Are the returns high enough against the cost of capital? And then is the right team across the board in place?
Before continuing, please subscribe and share this video to help us reach more people and stay notified of our latest releases. Now, let's continue watching and learning.
I love that. And we've heard this so many times that you're betting on not just the horse, but you're really betting on the jockey, the team, right? Team behind everything. Because, if you don't have the right team there, they're not going to know how to weather the storms. And you mentioned this a few times, right? There was the .com bubble and burst in the 99 to 2001 era. Then there was the financial crisis that happened. Then there was COVID, and there's all these different things that happened. And this is not something that's just like, it's a brand new thing. This is something that happens over and over again. We just don't know what the next quote unquote crisis is going to be, or financial issue is going to happen. And so having the right team is really, really important for any type of business. And I found personally that if you don't have a really great integrator or the operator with the great visionary, then it's really hard to build a strong team around that. So is there any advice that you would give to people who are going down this path on maybe the acquisition side or the merger side? Not necessarily startups. Startups can be a little bit different in the realm of how do you build a team when you don't have money? But when you're talking about these acquisitions and these operations where you're doing relatively large deals, how do you handle that whole process when it comes to maybe different cultures, different visionaries, different operators? How do you guys navigate those waters?
Yeah, it's you know what, it's never easy, and it's never no one situation is ever the same as well. So you're always thrown into a unique set of circumstances. But the big thing for me is the character of the team. Having a chairman type role is really important, because there's going to be times where the founder might want to go faster than the integrators, or vice versa, and you've got to bring it together. I think buy and builds are all about speed, going at the right speed, and you're going to miss deals as well. You're going to have private equity might pay more money than you can afford. You might be tempted to try and compete with that and increase the risk of the deal. And you just need the right level of experience on the table to say, we've got a great opportunity here. It's not based on the formula that we set out. We've got to be really kind of disciplined around the formula that you set out, because the market does ebb and flow and new entrants do come in. But at the end of the day, you're going to be judged on returns and have you delivered what you said to your original shareholders, what you're going to do. If you said, well, someone from private equity came in, sorry, I had to double the price that I paid and I've halved your return, then you're going to be judged accordingly. But you need discipline and the right people around you to point that out to you.
That's so true, right? I mean, we get what we call deal heat sometimes, and it sounds like it's so good, too good to be true. We got to get this thing, got to make it happen. And the discipline, the focus, and having your thesis or your buy box or your bullet points really nailed down as to what you're going to do and stick to your guns is really, really important. I think that's really challenging for a lot of people. And I know you guys are, you've been raising for a number of deals. You're raising capital to a fund. Tell us about the future of Cambria Group and Mike Allen as well.
Yeah, so I mean the Cambria Group's in good shape. The market, the automobile market is tough. There's no question about that. But in tough times, I think there's a lot of great businesses were born in the last recession, and they came out of kind of difficult opportunities. So in a kind of sadistic way, sometimes if the market gets really difficult, then there's more opportunity. But I think with the Cambria Group there's a great team there. If the right opportunities come along, I'm sure that they'll expand if that's what they want to do. We've got some good subsidiary businesses as well, which we will grow, the likes of Ramp and SoGo. And then the fund, we've been slow to deploy. That's fair to say, but we've got a rigorous approach to that. So, we only want to work with founders where we can see the technology has a meaningful impact on the businesses, so it can help dealerships in difficult times. And that's quite tough, because you can have really great technology, but it might be too expensive for dealerships. It might be too revolutionary for dealerships at this time. You've got to get your timing right. So we've been careful to make our considerations there, but we've got some interesting projects we're working on. So look, the next 5 years, hopefully we grow out the fund. I'm lucky that I've got some great businesses that I kind of advise as well. And, we've got a very clear value creation plan for all of those, which I'm sure will come to fruition, because we've as boards, we've been quite diligent. So, I think exciting times ahead, but we'll grow in the right way, in that kind of diligent way, as opposed to feeling that we've got to move very fast. It's got to be right for all stakeholders.
Yeah, absolutely. And so when you guys are deploying the capital in your guys' fund, what's the main focus? Is it on the buy and build side still, or is it the technology to bring these companies to market that's going to help your existing portfolio? Talk to us a little bit about that.
Yeah, so I think the fund, as it says on the website, 10 million fund. So the most we put into investment is $1 million. So it's quite a small fund, but we wouldn't invest in anything pre-seed. So the investments that we're looking at, companies we're looking at, have to have evidence of a happy customer. So it might not be a lot of revenue, but we want to see that there's kind of regular recurring customers. That might only be a couple, but they're doing something. They developed a product or a service that is having some good in the business, and a company is paying for that. I think then if that can also help one of our businesses within one of our subsidiaries, that's great. And then the investment is predicated on almost the money we give them is the kind of fuel to the fire. So we know there's a good formula there because we've rigorously tested it. Then it's working with them in partnership to say, right, the capital that will inject into the business will get you to that kind of Series A. So it might be a business doing 200,000-300,000 of revenue, and through the investment and our endorsement, we can get that revenue to $1 million plus, and it gets them to that next level of kind of investment. So that's kind of what we're seeking. And we don't see ourselves as just providing capital. We see ourselves as kind of providing partnerships, opening doors that they might not be able to open themselves, giving them getting the name out there in the industry, as well as providing the capital, and also helping them get to the next level, whether that includes us or we get out of the way for the next investor. So it's very much a kind of a partnership approach as opposed to just give someone the money, say, come back in 2 years once you 10x my money. Be nice if you can do that, but we think it's a lot.
Right, absolutely. So it's almost like a VC private equity kind of hybrid, right? Where you guys are bringing in the capital and the expertise, and you're supporting them, but you're not going for pure early stage pre-revenue kind of startups, things like that. So that's awesome. Are you guys focused primarily in Europe? Is it worldwide? Do you guys have specific geographies you're looking at?
Yeah, so we feel more comfortable in the UK, I'll be honest. But we've got an advisory business as well, and we've got advisory clients in Ireland. So we've been doing it. We've found some great businesses in Ireland where there's some super smart entrepreneurs. And actually, Enterprise Ireland have helped a lot of early stage businesses with some generous grants that allows them to get to that point where they can have one or two good customers. We're also advising and helping a Swedish SaaS scale up come to the UK as well. So we look at the Nordic markets because there's some really smart developers out there, and some great investors. And the UK is often 8 to 10 times bigger than their domestic market. So they have this great tech, but they can't scale it so well in their domestic market. And there's a great opportunity for them to come to the UK. So we've looked at some businesses there where there could be a good fit. And there's a lot in the UK as well. We talk to some US VC investors all the time, and we compare notes. So there's some great Autotech Ventures, etc. Have been great. They've bought some great businesses in the UK, and in fact, they've been phenomenal for Bumper, where they led the Series A and got them to Series B quite quickly. So we're looking all the time over the pond. The UK is in a smaller version of the US. There are some very significant nuances and differences between the two markets, but there's some great investors out there, and there's some great ideas from the US as well. So we're geography agnostic, but I think it has to work in the UK market, and it's rigorously tested by our operating assets, which are in the UK market as well. So we don't care where the ideas come from, but it does have to work in the UK.
Makes sense. Wonderful. Well, I appreciate all that, Mike. It's been great. I'm really looking forward to, maybe kicking some stuff over to you guys, because there are opportunities everywhere, as we know. And it sounds like you guys really understand the whole market there in the UK, as well as the automotive industry as a whole. So this has been a wonderful interview. I really appreciate it. Why don't you tell folks a little bit more about where they can find you online and maybe connect with you?
Yeah, sure. So I'm on LinkedIn. It's normally the best place. So it's at Mike Allen at Cambria Private Capital. You should find me there. Our website is www.cambriaprivatecapital.com. I also have a little podcast, Jeff, so you have to come onto that, called Ignite and Scale. So that will be on the website as well. So really those two. And my email is mallen@cambriaautos.co.uk.
Beautiful. All right. We'll make sure we get all of that information on the show notes. Looking forward to be on your guys' podcast as well. This has been wonderful, Mike. So thank you so much for being here. And for those of you that are watching, as always, like, subscribe, and share. Thanks for watching. And this has been another episode of Angels, Exits, and Acquisitions. Thanks for being here. Mike, thank you so much for your time.
Absolute pleasure. Thank you.